The market higher for the day, but our next guest says several economic signs point to a pullback ahead.
Yeah, that is Liz Ann Sonders. I'll be right with you, Art. Liz Ann Sonders of Charles Schwab joining us now to make her case. And we also have Lee Munson, portfolio asset management, to break down the markets as well. You actually would welcome a pullback of some kind, wouldn't you?
Yeah, look, I mean, I'm a non-apologetic bull, and we all sound like broken records to say that we're due for a little bit of a pullback. I don't think it would be terribly sinister, and I'd like to see some of that optimism as measured by some of the sentiment indices come back. But I think it ultimately would be a buying opportunity if we got one.
Maria?
Well, I think, when you see a market like this, which keeps going higher, Liz Ann, and you know that the Federal Reserve is not going to be ending its stimulus anytime soon, what do you want to do? Do you want to get cautious and sell into the rally, or do you think you want to be picking your spots, and where are those spots?
Yeah, look, no, I don't think you want to be cute and try to trade around this thing. I think for investors who are looking to maybe up equity allocations, you may want to wait a little bit here, but I certainly think it's a buying opportunity, although not much. You've had defensive leadership. It's not just been a sort of a fear trade. I think it's also been a yield trade. Starting to see maybe a little bit of a sign that the cyclicals are picking up some steam, but may not quite be at the point yet where they're a buy relative to some of the more defensive areas.
Lee, what have the earnings told you?
Well, let's look at what the news has done. You take a look at a Procter & Gamble, IBM, AT&T, earnings come out, it drops down, gaps down, resets to the bottom. You have very few things like a Netflix or a Nike that's actually popping with earnings. So we've had most 2-to-1 earnings beat on the S&P 500, those big names. But you also have 2, 3-to-1 where we've had gap downs and reset towards the bottom. So what the news is that we do have some earnings growth in the S&P, but stocks are acting poorly. I think it's a sign of decumulation versus accumulation. I'm with Liz. I want to sort of sit back. I want to wait for that buying opportunity. And again, I think if you're trying to mess around with particular stocks in earnings season, I think you should stop.
Okay. Maria?
Well, when you see other asset classes, are there safety nets that you can come up with in other asset classes? I guess, gold comes to mind, but of course we just saw that huge sell-off in gold. Where do you hide?
I actually think in relative terms from a safety perspective, it's the U.S. equity market, certainly relative to other equity markets, whether it's emerging markets or other developed markets. I don't think gold is there yet. I think that, that momentum trade is still on the downside, and I think it's still a relatively one-sided trade. There's still more money to come out. I think it's been the defensive U.S. equity stocks, and I still think that makes some sense, at least in the near term. Then I think the next trade is more toward the cyclical area.
Very quickly, where would you put defensive money?
Defensive money, if I want to commit capital right now, I would do it in the emerging markets, especially small cap. They've lagged all year. The valuations are reasonable. If I see more of a pullback, I'm back in the S&P 500.
Okay, two people looking for a correction. You're not alone on that either, by the way. Good to see you both. Thank you for joining us.